Now, stock markets and bulls in particular in the market regained control as the benchmark indices Sensex and Nifty bounced back after days of downtrend and value buying at low levels, along with buying in blue chip stocks. Markets up in the green over 1%, both the Sensex and the Nifty. We have my colleague Suyash Maheshwari now joining us live from News9 for more on that. Suyash, finally, seems like things are turning around for the stock markets.
Certainly, Krishna, good day for the stock markets and investors in India over here. Remember, in the past month and a half, we have seen incessant selling from the foreign institutional investors, which has weighed heavily on the investor sentiment overall. And if you look at, the factors that were, pulling down the markets, it was one, FII selling, incessant FII selling. Number two was China's stimulus package, and remember, over the past 2 years, they have corrected quite significantly, and because of that, their valuations were substantially cheaper than the valuations we were commanding over here in India. In fact, Indian markets, remember Krishna, sometime around mid-October to late October, we were 3 times more expensive than China. And after the correction that we have seen or witnessed in the past 1 month, the valuations have become quite reasonable. So we are seeing some bit of a pullback this, in today's trade. But let's talk about the factors that are driving the markets higher. One, that as I mentioned, that markets were in the oversold territory. Again, Nifty and Sensex, they have corrected by about 10 to 12% from their peak levels. The broader markets, they have witnessed the sell-off over there at least has been worse. And all the sectors that were driving the market higher in this bull run that we have witnessed over the past 15 months, they corrected by about 15-20%. So the valuations overall have become quite reasonable. So I think we are seeing some bit of a value buying going on over here. And another factor that is driving the markets higher is FIIs. I mean, they are still selling. They have sold equities worth about 1,50,000 in the past 1 month and a half. But remember, whenever FIIs were selling, our domestic institutional buyers were buying consistently, although the quantum of their buying was still lower, and that's where the net effect of the market was that the market was inching lower. Now, what we saw yesterday was that FIIs sold about 1,400 crores worth of equity, whereas DIIs have bought equities worth about 2,300, 2,400 crores. So DIIs have definitely taken over, and they are pulling the markets higher. So also we are expecting that since the valuations have become quite reasonable, and remember it's the holiday season, a lot of the foreign institutional investors, they head over to holiday. So we may not see participation or too much participation from them in the coming months, and DIIs, they can really hold the fort for Indian markets. So I think these two factors are going to drive the markets higher. Also, the stimulus package, Chinese stimulus package, the second one which came, I think that really did not, help the investor sentiment over there. The expectations was that it would be more, and a lot of the other sectors, especially the real estate sector, there will be more measures brought about by the Chinese government for them. But even though they have allocated by about 1.4 trillion yuans in the second stimulus package, I think that disappointed the market. The third factor, I think, Krishna, that probably is helping the markets this morning is that there is renewed talks that RBI may indeed go for a rate cut come December. Remember, the US central bank has already slashed its interest rates by about 75 basis points, and the expectation is that they will go for another 25 basis point rate cut come December. And what happens really is when FIIs, when the US central bank is cutting interest rates, it makes our market more attractive because investors are getting compensated for that extra premium in investing in risky markets like India. So if if RBI also does decide to go for a rate cut, I think it will make equities more interesting for the institutional buyers as well as retail investors. Also, the cost of capital will go down. So the market can probably take on that leverage trade that we had seen play out in the past 12-15 months.